So welcome. That's Tim that you see up above my picture. And I'm Jean, and we're both consultants with Clients First Business Solutions. We're both implementation consultants, and we've been implementing acuMatica for about 10 years with Clients First Business Solutions. We are very proud today to have this session sponsored by Trindocs. Trindocs is, since 2010, has served tens of thousands of users with tailored AP automation integrations across all of the leading ERPs that multi-entity, small business, and medium-sized businesses use for their companies. Trindocs' first client went live in 2024, and now they have multiple clients using Trindocs to eliminate 80% of the manual entry in their payables processes. Go to trindocs.com or email them in order to find out more information. It's AP automation as unique as you. Okay. All right. So now you know about Tim and myself, and we're two of the financial. We basically are really good at the financials of acuMatica. So let's go down to start talking about tariffs, because tariffs have quite a financial impact, or could possibly have quite a financial impact on your company. So what are tariffs? I mean, they're basically a tax. They're a tax that's collected by the government, not by the individuals, but it's passed on. It's usually passed on. Most of them are passed on to the consumer as higher prices for the finished goods or services that are sold to you. And the tax can be on components that are used in manufacturing, or they can be on finished goods that are brought into the country from other countries, specific countries, and then sold to the consumer. So let's go to the next slide. There's really 6 very easy steps to properly accounting for the tariffs. You got to know what your tariff cost is, and that's one of the main things that we're going to talk about today. And then, but you have to also know the accounting rules, and we're going to talk about the PricewaterhouseCoopers ideas of how to account for your tariffs. And then you have to decide where to report your tariffs on your financials. And number 4, how are you going to receive that information? That's going to be really interesting, because our clients are receiving it in all different ways. And of course, you have to set up acuMatica. And number 6, which is the most important today, or will be in November, is to analyze the results. And that's because the Supreme Court has said that they will make a determination as to whether the 2025 tariffs are legal or illegal, have been levied on an illegal basis. If the Supreme Court says they are illegal, then there would be rebates involved. So it's very important to track the amount that you're spending on tariffs. Let's go to the next slide. The basis of tariffs. How do you know what tariff you're going to pay? And the basis is HTS codes. Now, as you'll see at the bottom of the slide, that is, and we can make these slides available to you. Just let us know, and we will send you this slide deck. But that is the government URLs that will tell you what the HTS code is, and the HTS code then will tell you how much the tariff is. Now, HTS stands for Harmonized Tariff Schedule, and that's the U.S. tariff schedule. It's based on an international schedule called the Harmonized System, and that all the countries use. So in the U.S., the first 6 digit of an HTS code, and Tim will be showing you where to put that in acuMatica. In the US, the first 6 digits of the HTS code is the HS code, and the last 4 digits are US specific. Tim, can you easily show us the harmonized tariff schedule? And you can see that this has all about it, all about the HTS codes, and pay good attention to the interactive HTS training because they're not all that easy to find. As an example, do you want to use as an example, Tim?
Let's go ahead and use that, the one we were using before, chocolate milk.
Okay.
It's a good one.
And there we have it. But you can see there's lots of different codes for chocolate milk. And you have to really know what you're looking for in the HTS schedule. And Tim, do you want to talk a little bit about how the schedule is built, please?
Yeah. So you've got your first six, like Jean had mentioned, your first four is kind of a category, and then the second two. So that first six makes up the HTS code. That's going to be a broad category and a narrower category. But you really do have to be careful. These can get extremely granular, especially when we're in these. We've got looking at dairy products. These can get down into the what fat percentage. Obviously, not everybody's going to be working with dairy products, but things can be found in multiple different categories. So really getting it down to exactly what you're looking for can be somewhat difficult. So this 8 characters plus your suffix, this entire number will be your HTS code.
Right. And then in column 1, over on the right side, the rates of duty. Then column 1, you have your general rate, and then the special is all the special tariffs that either increase it or decrease it depending on what country it comes from. And then the second column is just more tariffs. Okay. All right. So that's HTS codes. Let's go back to the PowerPoint. Yeah. Next. Here it comes. Okay. So the second step, of course, is knowing the accounting rules. And of course, the first thing you want to do is talk to your CPA. But the second thing you want to do is you really want to look at the rules on the internet, because the HTS code that we were just showing you, that is updated with all the newest tariffs that are levied as they are levied. On the right side, in the black and white, are a few of the blogs that I've read about the rules to account for tariffs. You'll notice that the third one down is the PC viewpoint, the accounting implications of tariffs. I've written a couple blogs on this if you're interested. There's one on the acuCONNECT community forum that kind of summarizes all this research that Clients First has done in order to provide a proper accounting for tariffs within acumatica. So in PricewaterhouseCoopers viewpoint, it has a very interesting thing about the risk that tariffs pose on companies. And that risk is that they can raise the cost of the goods to be sold above what the market will bear. So let's go to the next one. So these are the key points of all that research. That you need to show the tariffs and duties on your balance sheet as part of inventory. That keeps you within GAAP. And in order to do that, you need to accrue for it if the actual expense is not yet known. And Tim's going to show you a way that we have helped some of our clients accrue for the tariffs. Once the actual expense is known, the expense obviously is shown in COGS. Now let's talk again about the risk, and the risk needs to be reported. And this is one of the most important takeaways from this session, that if you are at risk with your current contracts, if your company has current contracts to sell goods to companies at a very particular price, and the tariffs raise your cost of those goods to above what you're able to sell them for. That's the lower of cost or market. And you need to report that on your financials right away. So that will be a liability. And the lower of cost or market, if nobody's familiar with it, it's very easy to find how to define it and how to calculate that risk. But if you know the tariffs and duties, it's pretty easy to record them in Acumatica through landed costs. So you want to, yeah. So all of these key points add up to using landed cost, a standard function in Acumatica, to report your tariffs and duties. And now I'm going to turn it over to Tim because he has a very easy process to do this. So Tim, take it away.
All right. So I'm going to come back over here. I'll show you. And again, we're using everything that we're going to show is in standard Acumatica. It's something that you can set up. It just requires a little bit of setup. So in our stock items, by default, we have a spot to enter those HTS codes. So in our international shipping, select our HTS, and we can enter that HTS code that we find from the tariff schedule. So when we enter that, again, this out of the system, this doesn't give us much, just it's documentation. But what we've done on a few different companies is we've added the duty rate as an attribute. Now, I've done a very simplified version because this can change based on the origin of this product. So if you have multiple origin, if you're buying the same product from multiple countries as the source, then you might want to be a little bit more complex. I've made the assumption that I'm always buying this from the same supplier, and so my duty or my tariff rate is going to be the same. I've also used, again, I'm using a very simplified version just to kind of demonstrate how this works. I'm using just the main customs duty rate. Depending on the country of origin, you're also going to have those reciprocal tariffs. That's the ones that have been really in the news lately. And those are going to fluctuate a little bit more often than these. You also have to be aware that sometimes the tariff rates and the customs and duty rates vary on how they're calculated. They can be based on a percentage of cost, but they can also be an amount per ton or per liter, things like that. So just be careful that you're not always using the same rate, that you're just aware of how those are calculated. So I've added in here just a drop-down attribute for my duty on how that's calculated. Is that based on cost, volume, or weight? The ones I'm doing for just this demonstration, I'm just using a percentage of cost. Okay, so then we receive our inventory. I've got just a few items that I've set up with tariff rates. So I've got a few things. They have different rates, different HTS codes. I brought in my inventory. Now, there are a couple things, as Jean mentioned before, depending on how you're purchasing. If you're purchasing it with duties included, then really this is a moot point. It's just part of the cost of the inventory. Now, this would be if you're buying it from a foreign country, and you need to then pay the duties yourself. So this would be that situation. So I'm buying this at my original cost. So I just made up some costs here, and I've brought in my inventory at my purchase price. So what we've done is we've created a generic inquiry to pull those rates and my extended cost from my receipt. So this is going to give me, assuming I keep up with my attributes and I'm keeping my tariff and duty rates up to date, I should have a pretty good estimate of what that duty should be. So by running this, I can link my PO receipt number, I could get my tariff and my duty rates, and then I can move that into a landed cost, as Jean mentioned. One thing we have done for some is created like an export-import scenario where we can turn this into an import scenario to put these in, but I've just done this one manually for the demonstration. So again, landed cost is the way we'd want to go on this. And the reason for that is that landed cost increases our inventory, which is where that needs to go. So these tariffs really do increase the value of our inventory as they're on the books. So landed cost gives us that. One thing to be aware of Just again, minor points. If you're using standard cost, your landed cost isn't going to do much because your standard cost is always going to stay the same. So this is only going to work for basically everything except for your standard cost. So we've set up landed cost codes. This one I've called customs. You can also set up customs, duties, tariffs, as many different cost codes as you need, or landed cost codes, in order to run reporting after the fact, because that's really what we need to know. We need to know maybe at the end of the year, what did we pay in duties or what did we pay in tariffs? The other thing important to know is that really the allocation method that we used for our landed cost code is essentially going to be irrelevant because we're not going to do any allocation, because these tariffs and duties are specific to the product. We don't want to allocate it to our entire shipment. We want it to be specific. So in this case, I have actually linked the product or the inventory ID to that amount. So my chocolate milk that I've imported, there we go. It was $5,000 at my 17% rate, so $850. So in my landed cost, I've linked the $850 directly to that inventory ID, and then as well for my other ones. So whenever I post that, my allocated amount is going specifically to the inventory ID that it's required to go to. So that's going to be really the important thing, is making sure that it's going to the correct inventory ID. Again, I'm showing a fairly simple method here. I'm just showing duties. As you've known with everything in the news, the Chinese tariffs, the 301 schedule, just be aware of those, that that HTS code is showing pretty much the basic. But there's also the 301 schedule, which is going to be the Chinese tariffs, and your IEPA, which is the emergency economic power. That's the one that a lot of the reciprocal tariffs are being entered under. So you might have multiple tariffs. So be aware that could have lots of different complexities depending on the country. Now, these tariffs often, most of these depend on the country of origin, not necessarily the country of import. So be careful of that as well. Excuse me. Importing Chinese products via a Canadian company is not going to reduce those tariffs. So essentially doing that does give you the ability. We've also done, for some of our customers, we have done some minor customizations to automate that process, but that's something outside of what we're going to demonstrate here. Jean?
Yeah.
Did you want to pick up from there, or did you have anything you wanted to add?
Well, let's ask if we have any questions as yet.
Sure.
And then we'll pick up. No questions. Okay. I have a question for you.
Okay, go for it.
No, not for you, Tim. For our audience.
The audience. Oh, okay.
Can you put in the chat whether or not you're finding that the tariffs are increasing your costs significantly? Yes. Yes, we have clients that it's really significant. Okay, so let's go back to the slides, and let's go back to the slide that has the 3 and 4 on it.
Mm-hmm.
Next one. Okay, so another question to the audience. Oh, yes, customers refusing to accept. What we have found is that the customers, the end user, does not want to see the tariffs on their invoice. Some of our clients wanted to put how much the tariffs were on the invoice, but they don't want to see it. I think they don't want the pain. They just want to complain about the higher prices, which, what can you do? I mean, that's what's happening. Some of our clients are receiving the tariffs on a freight forwarder's invoice. And of course, that really helps when you're using landed cost. But some of them, at least one of our largest clients, is receiving them on a spreadsheet. And that's when Tim's import scenario idea really comes in handy. And if you need help, of course, we can help you, but you have your own VARs, I'm sure. So doing the spreadsheet and importing them into your landed cost will, again, help you with the putting it into inventory as is necessary to comply with GAAP. Okay, now, if you receive them within the AP bill, usually with just a higher price, that's where what Tim was showing you as the estimate of the tariffs will come in handy, depending on the Supreme Court decision in November. Because if they decide that the tariffs were levied illegally, then there will be rebates to the companies according to the news of today. I looked it up again this morning before we had this session, and they say that the companies will be reimbursed if the tariffs are considered illegal, the companies that have paid them. But of course, if a freight forwarder has paid them and then just forwarded you the bill, those are all aspects of the tariffs that you're going to have to keep track of so that you know how much you should receive versus how much you paid, etc. So, that means that the reporting within Acumatica through the GIs, through the landed cost, and anything else, Tim, am I missing something that we would need for the having the stock items have their HTS codes? That would all play into how you would report on the tariffs. Now, how you're reporting them on your financials. Reporting the tariff information on your financials, most companies are leaving, of course, they're going to go into COGS. Okay, so most companies are then creating notes. In order to create the financial notes along with your financials, you again need to have all these elements set up within Acumatica so that you can report on how the tariffs have been affecting your financials. The risk assessment is the big one, the current contracts and lower of cost or market. That risk assessment would be either in, now, Tim was an auditor. So Tim, where would you put the risk assessment in your financials?
Essentially that'd be in your notes. Really big issues. Yeah, if you, like you mentioned earlier, if you've got contracts with set pricing, with fluctuating tariffs going up, if you've got a locked in price that you're not able to raise, or again, if you have inventory that you're holding and the tariffs drop significantly, and now you've got inventory on your books that is no longer able to be sold at what you paid for it because the tariffs have dropped so much. You would have that issue of now you need to write down that inventory. So those would both be risks that you want to make notes of in any financial statements. So yeah, but you need to be able to keep track of that as well.
And remember that according to Price Waterhouse, at least, but talk to your own CPA, etc. By the way, we have all these links available for you in the blogs on our website. But if talking to your own CPA, you have to report the risk as soon as you recognize the risk. So that's why you have to track the lower of cost or market. That's why you have to track all of the HTS codes and how much you're paying. So, Chandra, Mani, is it possible to share the import scenario XML? I tell you what, you email us and we'll send it to you. Okay? Okay. All right. Next slide. Okay, so these are the elements that we used. This is nothing that you haven't seen but through Tim's demonstration. The stock item, this is just a nice, good list for you to know. Stock item, the landed cost, the accounts payable, and oh, by the way, if you're not currently using landed costs in Acumatica, understand that if you bring in a finished good, you accrue the landed cost so that the inventory is marked up to where it should be to go into COGS automatically when it's sold, that's all good. But if the bill comes in afterwards, the standard acumatica landed cost, how do I explain this, Tim? If the landed cost has been applied, it goes into COGS automatically. But if you get the bill for the landed cost and there's a difference in it, there will be a variance that automatically goes into COGS for things that are already sold. This is standard acumatica. This is
Can
one of the
I just clarify one point? I know what you meant, but just to clarify for the audience, whenever that landed cost is applied, if you haven't been using them already, you may not. When you apply that landed cost, it doesn't go directly to COGS. It goes to the value of the inventory, which will eventually get to COGS when it's sold. But I just wanted to clarify, just a fine point there, that as long as that inventory is still in stock, when you apply the landed cost, it increases the value of the inventory, which will then hit COGS.
But
Sorry.
go ahead. But if the goods are already sold,
then it goes directly to the landed cost variance account, which should be set up as a COGS account.
yeah, and in your COGS.
Correct.
So, okay. So then that's the accounts payable, the generic inquiries, and the financials. And again, the risk and the effect of tariffs, all of that should be notes to your financials, because you're going to have to explain why your gross margin is less, why your net income is less to all your stakeholders.
And can I make one more just an addition, something I've neglected to mention earlier, is if you don't have the AP bill, if you don't know exactly what you're going to be charged for these duties and tariffs, if you'd use the estimate, like I basically demonstrated using that calculation, that's an estimate. So it could change. Either tariff rates could change. Maybe you haven't updated it, or maybe you've miscategorized something. There are different reasons that those numbers could come in slightly different. Now, if the AP bill comes in and it's slightly different than what you had estimated and you've posted that landed cost, if it's a minimal amount, you can just change that when you enter the bill and it will go to that landed cost variance. Again, if it's a minimal amount, maybe just allow it to go and it goes directly to COGS. If it's a significant amount, I would recommend doing a corrective landed cost. So you can do an additional landed cost, even plus or minus, to correct the one that you had originally done. So if you estimated $100 in tariffs and it came in at 101, that would be up to you. Maybe you just let the dollar go to variance, or you could do an additional $1 landed cost, and you'd pay the bill for both landed cost documents for the 101. The one thing, like Gene mentioned, if the inventory has been sold, the system will automatically only apply the landed cost to the inventory that's still in stock. So anything that has been sold, because at that point we can't increase the value of that inventory, that landed cost portion, and it will do the calculations for you. It doesn't put all the landed cost on the items that are in stock. It does allocate it among the total quantity, and then it will add the pro rata share to the inventory that's in stock, and the ones that have been out of stock, instead of increasing their value, it will put it directly to that landed cost variance account. So just a few little best practices there to get the numbers as accurate as you can.
Next slide. If you have more questions, because we have less than a minute left, this is how you get in touch with us. And again, we'd like to thank Trindox and acuCONNECT for having us to be able to talk to and share the knowledge that we've researched on tariffs and how to set them up in Acumatica. So thank you very, very much for your attendance. Tim, do you have anything else?
No, thank you, everybody. I see some questions in here. I'll try to answer those as we wrap up.
Okay. All right.
Thank you, everybody.